I guess we'll wait for just 2 more minutes and then we will start with the session. Just waiting for just a few more people, I believe. But regardless, within the next 2 minutes, we will be starting the session. All right, I guess then we can start the webinar then. All right, welcome everyone. Welcome to the webinar. This is Mastering Break-Even Analysis, Essential Tools for Entrepreneurial Financial Success. I am Ben. I am a student recruitment officer from GBS Dubai. And with us here today, we have Mr. Ali Raza. Let me introduce Mr. Ali Raza to all of you who are right now here in the session with us. Mr. Ali Raza is a distinguished chartered accountant with extensive expertise in finance and accounting. He is a member of leading professional bodies, including the Institute of Cost and Management Accountants of Pakistan, ICMAP, the Institute of Chartered Accountants in England and Wales, the Association of Chartered Certified Accountants, ACCA, and what can I say? He's a highly committed person. He's very much committed to high ethical and professional standards and is very well recognized. So in the webinar today, we will be having key discussions about break-even analysis, how to calculate break-even points, etc. And I would also request that everybody who are having questions, please be, enthusiastic during the session, listen carefully so that you learn and you take something when you end this session. And whatever questions that you guys may have, please feel free to put it on the chat. At the end of the session, we will be actually going ahead and answering the questions. And also, please note that the e-certificates for those of you who are attending the sessions will be shared to your email within 24 hours of ending the session. So that being said, I give it over to you, Mr. Ali Raza. Please go ahead. You're not audible, sir. Not audible. I guess there's some issues. Not audible yet.
Can you hear me now?
Yes, now you're audible, perfectly audible. Please go ahead, sir.
Okay. Thank you so much, Ben, for such a comprehensive introduction. So, today we are going to discuss an extremely important topic, especially for the entrepreneurs. It is break-even analysis. It is an essential tool for entrepreneurial success. Today, in this session, we will be discussing few of the important ideas that are essential for any entrepreneur who is either doing a business or planning to start a new business. So what are the key considerations that must be kept in mind before taking any decisions? Because it's all about the informed decisions that we will be discussing it here. So to start with, in this session, this is our agenda. We will be discussing what is break-even analysis, what are the key concepts that we must understand if we want a grip of this particular topic, what is break-even point formula, how we can calculate it. So I will be sharing my spreadsheet to demonstrate you how we can practically calculate the break-even point, how we can prepare a graph to understand the whole idea. And in the same way, we will be discussing some practical aspects by looking at the practical activities and how entrepreneurs can apply this for their businesses. So this is our agenda point for today's webinar. So let's start with the break-even analysis. So, what is break even analysis? The whole idea is this: if I have started a new business, so I'm very much concerned about how I can avoid the losses, how many units I must sell so that I reach at a point where there is no profit and no loss. Definitely, if I get the minimum number of units that I must be able to sell, so I will sell those to avoid my losses, because this should be the first thing that any entrepreneur should keep in mind. So what is break even analysis? It is a financial tool that is used by the entrepreneurs to determine when a business will be able to cover all of its expenses and start making a profit. I always say break even point is a borderline. So at borderline, there is no profit and no loss. So if we are able to sell more than the break even point, so definitely we will be in a profit. And if we couldn't achieve our break even point, so then it will result in a losses. Besides talking about the profit or losses, the more important thing is taking the informed decisions. It is not just because I have started a business. It's not about when I will be reaching at the profitability. The more important thing is whatever decision I will be taking, that should be informed. I must have a clear picture of what we are doing and our decision will result, and what will be the implications of my decisions. So that's why it is extremely important to understand this idea. So we have incurred the expenses. We will be discussing in detail what are the different types of expenses that we need to incur. So there are different expenses. So how we will be able to cover this? What should be the minimum number of units that I should sell? And if it is a service industry, what is the minimum number of services that we should offer to reach at a point? And this is what we call the break even point. Now, the question is why break even analysis is important. Because by understanding the break even analysis, it will help us to understand the different types of cost, fixed cost, variable cost. It will help us to select the appropriate prices for our products. And in the same way, we can use it to determine our sales targets as well, because it will give us the minimum number of units that we must be able to sell to reach at a point that is break even, no profit and no loss. So this is the introduction of the break even analysis. Before moving forward and looking at how we can practically calculate the break even point, it is extremely important to understand how this break-even analysis can help us in decision making. So here I have highlighted four of the key decisions that where the break-even analysis help us. The first one is the sales targets, because break-even analysis provide us the minimum number of units that we should sell to reach at a no profit and no loss situation. So we have determined our cost. What is our fixed cost? What is our variable cost? We know this. Now, in order to cover this cost, what is the minimum number of sales that we must achieve? So we can calculate it in unit terms as well, and we can also calculate it in values as well, in dollar term as well. So we will be discussing this. So break-even analysis help us in setting the sales targets. Second point is cost controlling. The whole idea is this: there are two main types of cost. A part of cost is fixed cost, and the part is variable cost. So we will be learning how we can reduce our cost, because some of the costs are fixed. We can't do anything. Whether we increase our activity or decrease our activity, somewhat it will remain same. But there are costs that we can control. So this break even analysis help us to determine how we can improve our profitability by reducing the cost. Another important aspect is the pricing decisions. For any business, it is one of the most important decisions to determine the to set the price for your products. Because if we set a very high price, so customers won't purchase from us because there are a lot of other competitors. And if we set a very low price, we won't be able to cover our cost. So what should be the appropriate level of setting a price for our product? So this break-even analysis help us to determine this, what price we should charge so that we can reach at a profitability. There are different aspects that we need to consider, including the objectives of our business. But definitely, if most of the commercial businesses, their main objective is profitability. So if we are doing a business, we must earn profits. So which particular price we should set so that we can reach at a profitability? So break even analysis help us in this. And lastly, it also help us in our risk assessment, because if you know in advance how many minimum units you should sell to reach at a no profit and no loss position, so you will be able to assess the risk. And by calculating the margin of safety as well, that we will be discussing in detail, we will be able to assess the risk as well, whether we are closer to the borderline or we are moving away from the borderline, right? Because borderline is the area of the danger, right? So that's why we calculate the margin of safety. That is an associated concept of break even analysis. We will be discussing this. So these are few of the important aspects that we must understand how the break even analysis can help us in the decision making. Before moving forward and calculate the break even point for a given data, let's look at few of the important concepts that I was discussing. So first idea is what we call the fixed cost. So fixed cost refers to those costs that do not depend on the level of activity. Whether we produce more units or less units, our sale will be high or low, these costs will always remain same. Like for example, rent can be an example, salaries can be an example. These costs always remain same, and these costs do not depend on the level of activity, right? This is what we call the fixed cost. Second category of cost are variable cost or marginal cost. These are the costs that do actually depends on the level of activity. If we produce more units, these costs will also increase. And if we produce lesser quantity, so these costs will also accordingly reduce. The best examples are the material cost. So if you have produced 1 million units, so definitely we will be needing material for 1 million unit. On the other hand, if I am producing only 1000 units, so I will be needing material for 1000 units only. So this is what we call the material cost. Same goes for the labor cost, and there are some other expenses as well. These are the examples of the variable cost. In break-even analysis, it is extremely important to differentiate between the fixed cost and variable cost. Only then we can effectively calculate our break-even point. Besides this, another idea is the sales price. Sales price refers to the consideration that we receive in return of our goods or services. So the amount at which we sell our product or services is what we call the sales price. As I said, it is extremely important to set a reasonably good sales price. There are a lot of factors that we need to consider, but in general, this decision is one of the most important. And then next one is the contribution margin. Contribution margin refers to sales price minus variable cost. So sales price minus variable cost give us the contribution margin. So if we put the fixed cost aside, what contribution we are getting by selling one unit, by deducting the variable cost, what is the net amount that we are getting? It is what we call the contribution margin. So these four terms are extremely important in order to understand the break even analysis effectively. Now, the question is, yes, we have understood what is break-even point, why it is important, how it can help practically, how it is important for the entrepreneurs. Now, how we can do the calculations? What are the different tools that are available that we can use to calculate the break-even point? So there are different ways. Four of them I have wrote here. First thing is the manual calculation. So for smaller businesses or simpler models, we can use the manual calculations, right? I will be showing you, I will be sharing the formula with you. We can use the formula and we can easily calculate break-even point for any business. Excel spreadsheet, spreadsheet is one of the amazing tools in this world. So we can use spreadsheet. There are built-in formulas. We can calculate the break-even point, provided if we give the relevant data. In the same way, there are online break-even calculators available as well. So if you search it, there are different tools. All what you need to do is to put the relevant data there, like what is the selling price, what is the variable cost, fixed cost. So those online tools, they will give you the answer. This is the minimum number of units that you should sell, or this is the minimum sales revenue that you must achieve to reach at a break even point. And then we have different accounting softwares as well. So different accounting packages are there. They also help us to calculate the break even point, and also provide a lot of different reports that can help us to calculate the break even point. So these are the different methods. Anyway, I will be showing using the spreadsheet, although I will be doing the manual calculation so that you can better understand it. But I will be using the spreadsheet to demonstrate you how we can calculate the break even point for a given data. Now, let's talk about how we can do the calculation of the break-even point, how we can use the formula. So here I have wrote the formula to calculate the break-even point in units. It is very simple. All what we need to do is to take the fixed cost and we will be dividing it over contribution margin. The formula for contribution margin is sales minus variable cost. So this will give us the number of units that we must sell in order to cover our cost. So this is the formula for the break-even point. We will be discussing it further. Here I have wrote few of the important steps that we must follow to calculate the break-even point. Step number one is identify the fixed cost. Like let's say if I have started a new business, so the first thing first, I must identify my fixed cost. Now, what are the different types of fixed costs? Number one, rent must be there. salaries must be there. I have to pay the insurance as well. There are a lot of other costs as well. They are fixed in nature. Fixed cost simply means that it doesn't matter how many units we are producing, how many services we are providing, these costs will always remain same. Like for example, if I have produced 1000 units or 5000 units, I have to pay the same rent. So rent is what? It is a fixed cost. So step number one is you will be determining the fixed cost. Step number two is variable cost per unit. Like in order to produce the product, how much material we need, how much labor we need, what are the different types of expenses that are associated with the product. So you will be determining the variable cost per unit, and then based on this we will set a selling price. So selling price should be set by considering different factors. We can do the market research to assess at what price we can easily sell the product, or we can use the competitors, at what price they are selling the product, right? So we will set the selling price per unit. And then lastly, we step number four is we have to use the break even point formula to calculate the required sales volume. So all what we need to do is to take the fixed cost, divide it over contribution margin, and contribution margin can be calculated by considering step number two and step number three. So we will be taking the selling price per unit and deduct the variable cost per unit. We will get the contribution margin. So fixed cost divided by contribution margin will give us the a break even point. So in this way we can calculate it. So here I have wrote the formulas for break even point both in units and in dollars. If we want to calculate the break even in volume, in units, how many minimum units I should sell to reach at a break even point. So here is the formula. So all what we need to do is to take the fixed cost divided by contribution margin. So our contribution per unit. So we can take it to calculate the break even volume. And if we want to calculate the break even volume in dollars, right, in sales dollars, so then we have to divide it with the contribution margin ratio, or CS ratio we can also call it. So we will be taking the contribution per unit divided over sales or selling price. So you will get the contribution margin ratio. So say fixed cost divided by contribution margin ratio. So automatically you will get the answer in dollars, right? So in this way we can calculate the break even point both in units and in sales dollar. The good thing about break even analysis is this: we can use it to achieve our target profits as well. Like, let's say if I have started a new business and I want a minimum of $20,000 profit. So, can I calculate it? How many units I should sell to reach at a profit of $20,000? What is the sales volume in dollars that I should achieve so that I can earn a profit of $20,000. So this is the good thing about break even analysis, that it helps us to calculate the target sales units as well and target sales value as well. All what we need to do is to use the same formulas that we have used to calculate the break even point, but all what we need to do is to add the target profit in the fixed cost. So the rest of the things will remain same. Like, let's say if my fixed cost is $5,000 and I want to achieve a target profit of $20,000, all what I need to do is to divide it over contribution margin per unit or contribution margin ratio. So I will be getting the answers, like this much units I need to achieve a target profit of $20,000. We will be looking at some examples in a minute. So this is one of the most important aspect of break even analysis. We can use it to calculate the target volume as well. Before going forward and discussing how we can calculate the break even point using Excel, let me introduce you another important idea, and it is what we call the margin of safety. Margin of safety is an associated concept of break even point. The whole idea is, we have calculated our break even point and then we have a budgeted sales, our projected sales. So all what we will be doing is to compare our projected, our budgeted sales with the break even sales to assess that, how closer we are with the break even point. As I said earlier, break even point is something that we can call a border point, right? A borderline. So borderline is a dangerous area, right? So we want to move away from the borderline. So how much away we are from the borderline, we can use the margin of safety to calculate, how away we are to determine our risk. So here, for example, let's say if there is a company, so they are planning to sell 8,000 prints or 8,000 units of their product, and they have calculated a break even units of 6,250. So it means my budgeted sales are 8,000 units and break even sales we calculated are 6,250. So what will be the margin of safety? The difference. So it means 1,750 prints. In other words, this business is 1,750 units away from the break even point. So do remember, break even point means no profit and no loss. So if we are getting a positive result, it means we are in profitability. We are getting the profits. And if it is negative, it means, as we couldn't even achieve the break even sales, we are in losses. Like let's say if my projected sales are 6,000 units, but the break even volume is 6,250, so I must be in loss. So in this way, we can use the margin of safety to determine our risk as well. So risk assessment can also be done. So this is the graphical presentation of break even point. So you can note here on the x-axis we have put the number of units. On the y-axis we have put the sales in dollars. Now, fixed cost is there. You can see our fixed cost is $100,000. Our variable cost line is there. So variable cost and fixed cost will constitute our total cost. You can see the total cost, that is the orange line. So it includes both variable cost and fixed cost. And then we have this blue line, that is our revenue line. So now the point where revenue line is intersecting the total cost line. So this point is what we call the break even point. So you can clearly see in unit terms, we must sell 10,000 units. So when we sell 10,000 units, our revenue will be able to cover all the costs. So no profit and no loss situation. And in dollar terms, it is 120,000. So if we are able to achieve $120,000 sales, so automatically our cost will be covered. So this point where revenue line is intersecting the total cost, this point is what we call the break even point. So in this way, we can graphically present the break even point. Now, the next idea we are going to look at is how we can do the CVP analysis with the spreadsheet. So what I'm going to do, I'm going to quickly present you a simple calculation of the break even point. So I need a confirmation. Can you see the spreadsheet, please?
Yes, Mr. Ali, the spreadsheet is visible.
Yeah. So what I'm going to do, I'm just demonstrating, how we can do a basic calculation of the break-even point. So here I'm assuming some of the data, like for example, our fixed cost is $5,000. Our selling price is $10. Our variable cost is, I'm assuming it is of $6, and our contribution margin will be 10 minus 6, it will be 4, and our CS ratio must be contribution margin divided by the selling price. So it will be 0.4. So we can quickly convert it into percentage. So it will be 40%, right? So it means out of the total selling price, 40% is our contribution, right? And these are in dollars. So we have done the calculation. Here we can calculate the break even point in units, and we can calculate the break even point in dollars. Now the formula for calculating the break even point in units is very simple. As I discussed earlier, all what we need to do is to take the fixed cost and divide it over contribution margin, right? So we will be getting the answer in units. In the same way, if we want to calculate the break-even point in dollars, so the formula is fixed cost, we will be taking divide it over CS ratio, right? And you will get the answer in dollars. So in this way, we can use these formulas to calculate the break-even point. Now, let's apply these formulas here. So fixed cost is 5,000. This is what I have assumed. So divide it over contribution margin. So we will get 1,250. So 1,250 is the break-even point in units. So this is the minimum number of units that we should sell to reach at a no profit and no loss situation. In the same way, we can calculate the break-even point in value as well. So it is 5,000. We will be dividing it over CS ratio, that is 40%, and we will be getting $12,500. So $12,500 is our minimum sales revenue if we want to reach at a no profit and no loss situation, right? So in this way, we can do the calculations. Now we can also prepare graph to understand this in a better way. So as you can see, our break even point we have calculated, it is 1,250. So we can prepare a table. So let me prepare a nice table to demonstrate how we can prepare the graph as well. So the first column is units, we can put it. Then fixed cost we can write. In the same way, variable cost. Then we can write our sales. And then, here total cost first. And then we can write our sales here as well. And then lastly, our profit or loss. So let's prepare this table to understand, how the break-even point works and how we can draw a basic line chart to understand this. So here, our break-even point is 1,250. So how we can write the units? So the first one is 0, and it can be 50, 100. So let's say 1,500 units I have put it. So here I will be writing the fixed cost. So our fixed cost is 5,000. So that's, and our fixed cost will remain same. Even we are producing 0 units or 1,500 units, you can note the fixed cost will remain same. So I have put the fixed cost here. Now let's calculate the variable cost at different number of units. So here I will be taking the variable cost per unit. It is $6. Multiply it with the number of units. So 0 units. So I will be using the Excel magic. And let's calculate for the rest of the number of units as well. Yeah. So it means if we produce 1,500 units, so our variable cost must be 9,000. So here in this way, I have calculated the variable cost. Now what is total cost? Total cost is simply the fixed cost plus variable cost. So all what we need to do is to add the fixed cost and the variable cost to get the total cost. So let's calculate the total cost at different number of units as well. So you can note we have calculated the total cost. Now lastly, let's calculate the sales revenue at different number of units. So our selling price is $10, multiply it with the number of units. So number of units are 0, and in this way we will get the sales at different number of units as well, sales revenue at different number of units as well. So here you can note. Now let's calculate the profit or loss so that I can demonstrate you how we can determine the break even point. So now for calculating the profit or loss, all what we need to do is to take the sales and deduct the total cost from this. So it means if we sell 0 units, so there will be a loss of 5,000. So this minus sign represents the loss, right? So if we sell 0 units, so there will be a loss of 5,000. The total cost will become the loss because the sales revenue is 0, and we can use the same for the rest of the units. And you can see if we sell 1,500 units, then there will be a profit of 1,000. And here you can note, student, this one. So if we sell 1,250 units, you can note here, so then how much will be the profit or loss? It is clearly 0 here. So at 1,250, our sales revenue of 12,500, there will be 0 profit or loss. So in this way, we can determine the break even point as well. And now what we can do, we can plot this on a graph as well. I'm not going into detail and the complex chart. For the timing, I'm going to draw a simple break even chart for your understanding. So all what you can do is to insert, click on the recommended charts, and you can insert this basic line chart, and this will help you to understand the break even point. So here, if I show you, so this green line is the total cost line, and this blue line is the sales line. So where, the point where sales line is intersecting the total cost line, so this point is what we call the break even point. Here hopefully you can see it. So this point where the sales units are 1250 and the sales value is 12,500, so it is a break even point. So in this way, what we can do, we can draw a basic line chart as well, line graph as well, to understand the break even. Hopefully you have understood, how we can calculate the break even point using the spreadsheet. Now moving forward, let's quickly discuss few of the important aspects, because a lot of entrepreneurs and business owners and students question this. This example that I have considered is for one product only, but most of the time and most of the businesses, they have more than one product. So if there are more than one units, so how we can calculate the break even point in that case? So whenever there is a multi-product, so we can use the same idea that I have discussed here. But what we have to do, instead of using the contribution margin of one product, we have to take the weighted average of the contribution margin of different products. In the same way, instead of using the CS ratio of one product, we can use the weighted average of the CS ratio. So in this way, we can calculate the break even point of the multi product as well. So for your understanding here, I have wrote one example so that you can understand the multi-product idea in a better way. So just assume, so there is a company, so they sell 9 prints for every enlargement. So it means this is their product mix. So product mix is given 9 products, 9 units of one product is equals to 1 unit of other product. Now 9 prints they are selling at 60 cents, and enlargement they are selling it at $1, and their variable costs are also given. So you can note, students, these are the two products P and E. Their selling prices are given, variable costs are given, and what we can do, we can calculate the contribution margin. So it means one product is giving us 24 cents and the other product is giving us 44 cents. Don't forget the product mix. It is 9 units of prints and 1 unit of enlargements, and fixed cost is also given. So can we calculate the break even point in this case? Do remember, all what we need to do is to take the weighted average of the contribution margin. So here you can see one product is giving, that is prints, it is giving us 24 cents. So multiply it with its respective product mix, that is 9 over 10. So what you will be doing, 9 units of one product is equals to 1 unit of the other product. So 9 plus 1 is equals to 10. So 9 over 10 and 1 over 10, so we can even convert this into percentage as well. So 90% of the contribution we are getting from first product, and 10% we are getting from the other product. So what you need to do now, multiply the contribution margin of first product with its respective percentage of product mix, and then multiply the contribution margin of the second product with its respective product mix. So simply you will get the weighted average contribution margin. Simply take the total fixed cost and divide it over weighted average contribution margin. You will get the break even point for the multi product. So here you can see, this is what I was talking about. So how we can calculate the weighted average contribution margin? You can see I have multiplied 0.24 with 90%, 0.90, and multiplied 0.44. This is the contribution margin of the second product with 10%. So in this way, I will get 0.26. So this $0.26, it is the weighted average contribution margin, and we can calculate the uh, break even point in case of the multi-product as well. So you can clearly see I have wrote the fixed cost, that is 1820, divided it over weighted average contribution margin, that is 0.26. So I will be getting 7,000 units. So it means this company, this business must sell 7,000 units in order to achieve break even. But here is a question now. 7,000 units mean it includes both units, right? Both prints and enlargement. So how we can divide 7,000 units between the two products? How many units of prints I should sell, how many units of enlargement I should sell. So all what you need to do is to multiply the 7,000 units again with the product mix percentage that you have calculated. So 7,000 should be multiplied with 90%, because 90% is the product mix of prints, and you will get 6,300. So 6,300 units of prints should be sold, and 10% of 7,000 obviously 700. So 700 units of enlargement should be sold. So total units will be 7,000. So in this way, what we can do, we can calculate the break even point in case of multi products as well, by taking the weighted average of the contribution margin, and then again we can multiply the break even units with their respective product mix to get the individual break even point. So now, by looking at this example, it is quite clear. All what we need to do is to sell 6,000 units of our first product and 700 units of our second product to achieve a break even point. So here I have wrote the extension of how we can calculate the weighted average contribution margin and weighted average revenue as well. If you want to calculate it in dollars as well, so you can do in this way. So this is the summary of what we are discussing. So in case of if you want to calculate the break even point in units, so you have to use the weighted average contribution margin. And if you want to calculate the break even point in dollars, so you have to use the contribution margin ratio. Like here I have done it, 40.625% is the contribution margin ratio that we have weighted average, and directly you will get the break even point in dollar. Okay, so now after discussing how we can calculate the break even point in case of single product and in case of multi product, now let's quickly discuss how we can use the break even analysis in practice, and what are the benefits and what are the different scenarios we can use the break even analysis. So here I have identified three different scenarios where we often use the break even analysis and break even point. The first one is whenever a business is launching a new product. Whenever we are launching a new product, it is extremely important to determine what should be the right price that we should charge. And in this way, using the break even analysis, we can also determine the sales target as well. Because whenever we are launching a new product, so most important thing is when this product will reach at a position, we can call it a profitable product. So if we know this in advance, so we can accordingly set our sales targets accordingly. So that's why what we can do, we can calculate the break even point of the new product and simply disseminate this information among our sales team members, so they can accordingly work to achieve that sales target, to so that we can make that product a profitable product. So launching a new product is the first scenario where we can use the break even analysis. Second one is the scaling up of our operations. So whenever we are thinking to scale up our operations, we are thinking to increase the sales volume, so we need to consider different factors like fixed cost is there, variable cost is there. So how many units we should sell, especially if at the start of this presentation I discussed about the sales target, and I also discussed about the target profit as well. So if you are thinking to increase your profits and there is a set profit given, and you have decided to reach at a certain profitability limit, so this break even analysis can also help us. All what we need to do is to add the target profit in our fixed cost, and this break-even analysis will give us the answer that will be in units or in dollar term. So it will act as our target that we must achieve if we want to reach at a certain scalability level. Then it also help us in cost cutting as well, because as part of the break-even analysis, we must differentiate the cost into fixed and variable, so we can understand which costs are fixed in nature, which costs are variable in nature. So this help us to understand these costs and how we can control these costs, how we can do the cost cutting, so that we can reach at a profitable position. Whenever we talk about break even analysis, there are different mistakes as well that we must avoid. Only then we can get the real benefit of the break even analysis. The first one is, I have seen a lot of entrepreneurs, they ignore the fixed and variable cost. So it is extremely important, we must understand these are the two different types of cost. And especially when we are at a very starting stage of a business, if it is a startup, so we must try to minimize our fixed cost, so that if fixed cost can be minimized, automatically there are chances that this business will be successful. So that's why it is extremely important to differentiate between the fixed and variable cost. then sometimes we overestimate the sales price or the sales volume. So because every product has a respective market, and especially it is extremely important to consider your target market as well. So it shouldn't be like we are just playing with the numbers and we are ignoring the reality. So that's why it is extremely important when we are setting our target or when we are setting our prices. It is extremely important to consider the market factors as well. Whether we will be able to sell this product at this price in the market or not. Or whether we will be able to set this price for our respective market, target market or not. It is extremely important to consider these factors as well. Then not reassessing regularly. Do remember calculating the break even analysis. It is not a one off exercise. Rather, there are different factors and different variables and assumptions involved. So when these variables are getting changed, so it is important that we recalculate our break even point. So that's why it is not a one off exercise. Cost is there, prices are there, market condition might get changed. So it is extremely important we accordingly recalculate our break even point, so that we can accordingly reassess it. Then misinterpretation, the margin of safety. So do remember, it is extremely important we must compare our break even point with our estimated sales. So any difference is what we call the margin of safety. So margin of safety should also be interpreted in the right way, so that we can understand the risk. Like for example, if last year our margin of safety was 20% and this year it has reduced to 5%, so we must be concerned about this. What we can do to increase our sales, so that we know we can move away from the borderline. Yes, so I think that's it. So now it is time for the questions. So if you have any question, please feel free to ask. Yes, Ben.
That was an amazing session, Mr. Ali. Amazing. It really, I was hooked in throughout the whole session because this is something that is very important for people who are planning on running a business or launching a product. If they are planning on getting their business to the next levels, then these kind of things are very important. I learned a lot today for sure. This was amazing. And we have some amazing questions, by the way. While we were conducting this webinar, I noticed that, we were live on Instagram, Facebook, as well as YouTube. And I noticed that there were some questions that has come from these platforms as well from some people. But these questions are really, really important, I think, because these are things I think were not completely mentioned during the thing, but I think you can definitely help us in this regard. So the first one is that, the question is, um, the one of the questions is, what role does break-even analysis play in securing funding from investors and lenders? How can it help actually?
Yeah, actually, once we calculate the break even point, both in units and
Hmm.
in value, so we can
Hmm.
easily demonstrate to the potential investors, like, if we want to achieve or reach at the profitability situation, so this is the minimum number of units that we should sell. So it also build up the confidence among the investors as well. These sales
Right.
targets are what these appears to very very doable, right? And
Hmm.
we can also demonstrate the risk involved as well by showing the minimum number of units that must be there to achieve this. So this is one of the important measures that we can use
Okay.
to demonstrate the minimum number of units. So it also help us in securing the funds as well.
Amazing, amazing. That's great. I mean, I hope that that was, a question I'm pretty sure that a lot of people, especially who are planning on actually going that route, would have had. But now we have another question that I also think is just as important and going to be great for people who are planning on starting their business. The question is, can break-even analysis help in determining the right time to launch a product?
Yeah, so because whenever we are thinking about launching a new product, as I discussed in the presentation as well, so this is one of the possible scenarios where I have seen a
Hmm.
lot of entrepreneurs need the break even analysis, because
Hmm.
launching a new product involves a lot of efforts that we need to put on, but at the same time we need to be very careful about the financial aspects as well. So whether
Okay.
the price that we are setting is the appropriate price, how much variable cost is involved, and what is the fixed cost that is there. So we our new product that we are going to launch, it must cover both fixed cost and the variable cost, and this can be calculated by calculating the break even point. So therefore,
Okay.
whether a product should be launched or not, so break even point can definitely help us. But here I want to mention this as well, it is not just the break even point, because break even point is the financial aspects. There are a lot of other non financial aspects as well. So the
Hmm.
decision of launching a new product is not solely depends on the financial aspects as well. I think
Hmm.
market conditions and the competitions are the other factors as well that we must consider.
Wonderful. That's great question. Well, both these questions actually, one of the questions came from Facebook, and one of this question was from YouTube. We also have one more question from our YouTube live, actually, that I believe this is also going to be very, very important for people who are planning on, doing things with business and everything. So the question here it says is that, uh, so it says that what is the significance of understanding the margin of safety in break-even analysis? I'm sure you did cover this during the session. I did notice that, but the person has once again asked this question. So when it comes to margin of safety, how important is it in getting break-even analysis?
Yeah, actually, the margin of safety simply means that the difference between our budgeted sales, our expected sales, and the break even sales. Once we
Okay.
have calculated the break even sales, so we know,
Hmm.
okay, this is the minimum number of units that we must sell. Now compare it with your budgets, compare it with your forecast. So we have planned. I have started a new business, and I have planned I will be selling 5,000 units in the first year. Now calculate
Right.
the break-even point. So break-even point is 6,000. It means
Hmm.
5,000 units are not enough. So
Hmm.
if we are selling 5,000 units only, we won't be able to achieve the profitability, and vice
Right.
versa. If we have set a break even point of 5,000 units, so our expected sales must be more than this, then we will be able to achieve the margin of safety. So it means we are moving away from the borderline. This is the term that I have used. So we are moving away, so we are going towards safety. So this is what we call the margin of safety.
Amazing, amazing. We have one more question. This also is from one of the students. I'm glad the students are actually very active. We see a lot of questions coming in. I wish I could ask all the questions, but due to the time constraints, I'm asking some of the most important ones that I think are going to be, common for everyone. Everybody wants to know. The next question is, hi, sir. I need to ask about the break-even analysis. If any business ignores the break even analysis of their business and totally focuses on just net profit, is this the right way of doing business?
Actually, if we are just focusing on the profit, so the whole idea is this: in order to reach at profitability, break even point, and there are other financial tools as well, they are
Hmm.
helping us to reach at the profitability. So by ignoring break even point, so actually we are ignoring the ways that will ultimately lead to profitability. So that's why break even analysis help us to determine the minimum number of units that we should sell to reach at a profitable situation. So if we are ignoring the break even point, so it means we are not taking the informed decisions. We are just randomly doing the work, and we are
Correct.
thinking that we will be able to reach at the profitability.
Correct. That's an amazing answer. I hope that was actually a very good question. Whoever it was who asked that question, I hope that helps you in terms of planning your business as well. One last question, sir, before you go. I wish I could ask all of it, but this is one last question. We have a person here who says that if we determine before we launch a product or before we start a business, if we know our break-even point, based on that, can we make changes beforehand on, maybe reducing the cost? He's saying that maybe, the business can sell below the break-even point price or maybe above the break-even point price. So what do you have to say about that?
Yeah, actually, break-even point involve different variables. It is fixed
Okay.
cost is there, selling price is there, variable cost is there. Most of the time, we can't play with the fixed cost because it's there.
Right.
Whether we produce
Right.
more units or less units, the fixed cost will always be there. What we
Right.
can play with is our selling price and the variable cost. So yes, so if there is any change in these variables, so as I said earlier, one of the mistakes that most of the entrepreneurs do, they calculate the break even point only once, and then they think that the same break even point they will be using for the rest of the year and the rest of the life of the
Hmm.
product. But that's not the
Hmm.
case, because as
Right.
the market conditions are changing, as the demand of the product is getting changed, or the variable cost is getting changed due to inflation or other factors, so we need to reassess our break even point, and it is recommended that we should oftenly recalculate our break even point so that we can stay on the track.
Would you say that calculating the break-even point should be done on a monthly basis, quarterly basis, yearly basis? What would be the most ideal way to do it?
Yeah, actually, it varies from industry to industry and for sure market conditions, but I think minimum we should consider it on quarterly basis, at
Quarterly
least.
basis. Perfect. Amazing. That was an amazing session, Mr. Ali Raza. I'm pretty sure everybody who have attended the session enjoyed it thoroughly. I certainly did. I learned so much new things just with the information that we have here. I know this, starting a business or launching products and selling is far more complicated than just what we have seen in the webinar. But just with what we have seen here, it is we can say that somebody with just an idea of what they are planning on doing, if they apply what you have taught today in this session, they can start making a lot of changes. So that being said, thank you very much, Mr. Ali. Now I will also go ahead and give an introduction about the kind of programs that we have here, so that maybe students, if they in case they are interested, they can join GBS Dubai. We are, by the way, to all the students who are here, especially those in Facebook Live, YouTube Live, and Instagram Live. GBS Dubai, we're just briefly, GBS Dubai is actually, we are a British college. We are having a college in Dubai. We are having a college in Malta. And we have four colleges in the United Kingdom in UK. So students are, whoever is interested to join the Dubai, we are located here in Dubai Knowledge Village, Block 5. Very close to the Dubai Internet City Metro Station. And we are having all kinds of programs, by the way. So this is just a very, very small part of what we teach here in GBS Dubai. We go from things, far bigger. We have a lot of advanced level studies that happens here. So we have level 2, level 3, level 4, and level 5 Pearson qualifications. Okay, so all our qualifications that we provide are Pearson qualifications, and on top of that, we are approved by KHDA, which is the education board of the government of Dubai. Now, the kind of courses that we provide for students can vary depending on whether you're going into tech related or non-tech related. So if you're going into tech related, we have programs related to artificial intelligence, cybersecurity, IT, and if you're going into business, we are having international business courses starting from level 2, 3, 4, and 5. Now, any student who is actually having a qualification of high school or diploma, they can directly enter into their level 4 and level 5. If you have only completed your 10th grade or your 10th grade, you can enter into level 2. And if you have completed your 11th grade, you can enter into level 3. Now, for those of you will be interested, onto the chat, I'm going to be adding my name. And I will also be adding our details over here, my details, my email ID. And if in case any of you are interested in coming to the campus, visiting Mr. Ali Raza for a discussion face to face, or would like to meet me, I'll be more than happy to help you. So I'm just putting my name on the chat for those of you who would be interested. They can directly reach out to me. My email ID is also presented. AC.ie. There you go. So for those of you who are interested, just directly send me an email to that. And if you would like to know more about the course related to what Dr. Ali Raza have taken today, we are having ACCA. By the way, we are an approved ACCA exam center and we are a gold partner of ACCA. So you will be getting one of the best level trainings in terms of your ACCA certification paper. So here you're not just going to be taking a training and taking your papers. You're going to be going through the entire process where you learn things in depth with some of the best professors available in Dubai. As you might have seen today with the session, you have noticed the kind of knowledge that our professors have. This is just a small part of it. There's so much more advanced things in this, like even the Excel sheet. That was just a small. That was just like something that he showed because of the time constraints. But I'm sure if we had more time, we could have a more elaborate training on this. So I'm sure that a lot of you would have loved this session, and those of you who are interested, please make sure to reach out to me on the details that I've provided on the chat. And with that, thank you very much, everybody who have joined for the webinar live from Facebook, from YouTube, from Instagram, and other platforms. Thank you very much, and thank you very much, Mr. Ali Raza, for this wonderful presentation. Thank you. Thank you, everybody. See you.